The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your competence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. G'day traders, mindset reset and a technical video. We're going to be reviewing a couple of examples of 3 days of breakout traders in the markets. Page 51 in the playbook. Now understand, this is a trigger day, a signal that can alert us to a potential opportunity setting up. Remember, I asked the question repeatedly, what setup are you hunting? So if you've mastered a setup, you're patiently identifying markets that signal you for that potential setup evolving and being able to be an opportunity in the session that you're trading. For 3 days of breakout traders in the markets, I want you to understand some simple things. Understanding what happens when markets close in breakout. Typically, when a market closes in breakout, we have all time frames involved. So a market closes in breakout, we now potentially have hourly, 4-hour, 15-minute, smaller time frames obviously on board. But when a market closes in breakout, it also alerts other time frame traders about this market. Breakout traders, and just as an example, the turtles would trade breakouts of 20-day highs and lows as one of their models, their basic models. So when a market closes in breakout, not only do we have all time frames potentially involved, but we now are alerting other time frame traders to come on board also. Now, understanding when traders are trapped on those breakouts, so if this market is setting up for an opportunity for a reversal trade, we now will have levels where markets will trap traders up high or down low. We've talked about the neckline. Head and shoulders is a classical charting pattern, a reverse head and shoulders. Timings, levels, behavior of price on the day itself. How does price have to behave? And levels of involvement in the session that you're trading. So we have a new week, a new timing cycle. When a new week starts or a new month starts, those are potential time frames where markets may be reversing. And then signal, the importance of understanding that 3 days of breakout traders in the market is a signal. It is not just get on board. It's a signal that this instrument may be setting up now on the day in the session that you're trading. Now the Dow Jones 30, we had a market close in breakout last Friday. It broke out again on Monday, broke outside of Friday's high and closed in breakout on Monday. That market then reversed on Tuesday, day 2, taking out the low of the week on Tuesday, coiling sideways into Wednesday, day 3 on the front side, and closing back outside of the previous high of week range. We also had a high of month from September in there, represented by the green line, which coincided very closely with the low of Monday and that coil on Wednesday, day 3 on the front side. Now we broke out again on Thursday, closing in breakout again. So we've had the reversal on Tuesday, potentially stopping out Monday's day 1 breakout traders, coiling sideways, breaking out on Thursday and closing in breakout at the high of the month for October. The market has dipped down into Wednesday's closing price before closing back in range, but a higher close. And you'll notice my notation, 1, 2, 3 higher closes closing out the week. So we've closed outside of Tuesday, Wednesday's high of week range, and we have now Thursday, Friday, and Monday, a third day outside of the range. 3 days of breakout traders, again outside of 1, 2, 3 days of breakouts on the longer time frame outside of the previous weekly high. We have 3 days above Tuesday's high of day level. Wednesday pushed a bit higher. We had a range expansion. 3 days now outside when we start our new week Monday. Prior to our New York Open, the market has broken down beneath highest close of the month. Prior to the New York Open, we've pulled back inside of Wednesday's high of week level prior to the breakout. Pumped back up into Friday's close and Thursday's closing price. You'll notice we have volume above inside of our box up top, but also above Thursday's low of day level, the escalator up. The pump up, pull back, pump again, pull back, pump a third time into 3 higher closes on the third day outside of Wednesday's high of week range at the New York Open. 10 a.m. on our 5-minute chart, our third hour opportunity for the coil and the parabolic reversal after 3 days of breakout traders in the markets. I also want to enforce the importance of understanding what that third hour is. 10 a.m. is a new 4-hour rotation. So when we have high of week or low of week reversal templates setting up, that new 4-hour rotation can have big significance, because once that market goes, it may not be coming back for at least 3 to 4 hours. So we have a market that broke out on Monday, reversed on Tuesday back inside of the range, broke outside of Friday's high again on Wednesday, day 3, broke out on Thursday, closed in breakout Thursday, Friday, Monday, a 3-day setup. Page 31 in the playbook, aligning with 3 days of breakout traders in the markets. Page 51 in the playbook. We had a similar example today on the Russell 2000. Similar to the DJ30, the Russell broke out last Friday, closing in breakout. Again, another signal. Broke out again on Monday, staying in breakout, pushing higher, a range expansion on Tuesday, day 2 on the front side before closing in breakout a third time on Wednesday. 3 days of breakout traders in the market outside of our Tuesday high of week level. Sideways Thursday and Friday, inside of higher highs, coiling sideways on Monday, breaking down prior to our New York Open. Lower lows on the inside. We've broken a low of day level. So notice on the way up, we only break high of day levels. We have a break in structure. A break in structure is when we have an opposite daily level broken. 3 days of breakout traders in the market heading into our new week. New York Open traders on Wednesday were forced to buy up high, and I've talked about training your eyes to move horizontally at the levels. This is an example of where when markets move away from levels, how traders begin to get trapped up high or down low. The high of week level now acting as a neckline heading into Monday, day 1 on the front side of a new week after 3 days of breakout traders in the markets. When we have markets with trap volume up high for 3 days, these are ACB templates. Our universal entry criteria, page 29 in the playbook. Basic model for trade entries, page 29. And similar to the Russell, we have a death candle where we clear out the pump before pulling back into the low of day level. And new 4-hour rotation, a pullback into our coil as the hour ends and we head into the 10 a.m. hour for the parabolic collapse back through into Monday's opening range breakout traders. So a very simple model, but understanding if this is what you're hunting, how these templates will set up and continue to trap volume in line with a market that is quote unquote trending. Now we have longs being caught at higher and higher levels. If this is the setup that you're hunting, understanding that when these markets continue to close in breakout and break out again, we are triggering other time frame buyers into the markets and other traders following or chasing those trends. The week we head in towards the end of our week, a new timing cycle, a new week is about to start, and we have a parabolic collapse on the front side of a new week on Monday, day 1, after 3 days of breakout traders triggered into the markets. Both of these were scalable opportunities, and it reinforces Bill Lipschutz's quote, "If most traders would learn to sit on their hands 50% of the time, they would make a lot more money." So if you understand the setups that you're hunting, you understand that all the little bars inside mean nothing. It's where we're getting other time frames involved in the market. One of the comments I received was that I don't go into enough detail about price action inside, and I repeat this. There are 3 levels that every trader has on any instrument when they come to the market. And you'll notice that these little movements inside, if we're waiting for a larger template to build up, it's the levels and the understanding of other time frame traders being triggered into the markets to offer us a parabolic opportunity. Keep it simple. Sit on your hands and wait for the larger templates to set up. These were two textbook perfect examples of 3 days of breakout traders not only triggered into the market, but then setting up on the day into the timing window for a parabolic trade setup opportunity, a playbook best trade candidate. Keep it simple, traders. Focus on the big picture. Rinse and repeat, scale it up in size, and may the markets go with you.